I would say the number one thing that I would say at this stage, which is an interesting time of the country's history, an interesting time with more opportunity than I truly believe we've ever had in decades and decades. But I believe the wheels of economics, the wheels of the economy are turning more than ever and impact small businesses more than ever. What I'd say is learn as much as you can about the economy, learn as much as you can about business, become sophisticated and understanding your way around that, because all that information is now out there.
Welcome, millionaires and future millionaires. You're listening to the Millionaires Unveiled podcast, a show where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their portfolio allocation. Now to your host, Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 402.
This is the podcast that takes you behind the scenes with self-made millionaires to reveal the real stories, hard lessons, and surprising truths about building wealth. We are your hosts, Jason Stacy, and each week we dive into the journeys of individuals who have achieved financial independence. Whether you're looking for inspiration, actionable advice, or just a glimpse into the mindset of those who've made it, you're in the right place. Get ready to learn how they did it and how you can too. Our conversations are always candid and only edited to stay family friendly.
Temperatures are starting to rise and yeah, I'm excited. Today's guest, he's got now worth of $3 million. His name's Nick. Actually, I should say 3 plus. He would hit 3 when he turned 30. Primarily in real estate, but has some investments in business and some other asset classes as well. It's quite the journey from working for free to learn the ropes in a family office. And we're going to get in all the details today. Going to be a great episode with him. If you'd like to be on the show, send us an email, millionairesunveiled@gmail.com. Always looking for new, great, entertaining guests that are willing to share their stories. And yeah, we got several great episodes coming up and excited for that. So without any further delay, let's get right into the episode with Nick. Nick, do you want to just give us about your background and what you're up to now?
Yeah, Jace, it's been great catching up with you a little bit beforehand here. My background is I always had a huge amount of respect for success, especially financial success. I got to see early family members that were entrepreneurs that I just had so much respect for. So by the time, I started working very early. By the time I graduated college, I wanted to find out how to be next to shoulder to shoulder with the best, wealthy, smart, sophisticated individuals I could. So I worked for 2 family offices, multi-generational family offices just out of college. I worked for free. I had to barter for those jobs to work for free, right? So they wouldn't even take me for free early on. And through those relationships, through those mentorships, through that experience, I learned how to acquire real estate below market values, how to scale and build asset management, and then how to work with investors at a really high level. So that was my experience working through and being close to investors and individuals that are very high net worth. Now today, we just crossed over 200 million in assets under management at Saint Investment Group. We focus on income funds as our number one go-to-market strategy, our number one investment thesis and opportunity for investors. So we've 15 years plus of being in the trenches, seeing many different deals, really proud of what we've accomplished and stood on the shoulders of amazing mentors that let me in on their story and their tools and their tricks early on.
Wow, what a career journey that you've been on. And I can't wait to get into the details because it is pretty unique, being on our show and having this kind of career trajectory and working for free. You don't hear that very often anymore nowadays. I feel like everybody that wants to apply for a job, it's like $20 an hour minimum nowadays. But before we get into all those details, what's your net worth today?
So what I'm proud of is lots of hard work in my 20s. I traded my 20s for 60, 80, 100-hour weeks. I really, really hit a stride at that period of time. We crossed over 3 million net worth, I crossed 3 million net worth before the age of 30. Couple exits in businesses, couple big deals, and partnerships on some opportunities that we were putting together.
Nice. And 3 million at 30, how is your net worth broken up?
I'm proud to say that I'm a real estate dog. So I am way, way bullish on real estate. Earlier on, it was primarily in different businesses and in different partnerships. So I always focus on businesses that were trying to build cash flow. So first business that was successful was an ATM business. Next businesses leaned into the real estate side and the entitlement side. So, zoning changes, law changes, working with cities on what that would look like and buying properties that would cash flow at very high levels. And then now today, it's almost primarily, I would say 80%, 70 to 80% real estate for my net worth today. I own some stocks. I'm very boring at stocks. ETFs only, we're talking index ETFs of, SPY type things, S&P 500, Dow Jones. The rest, the majority is in real estate projects, I'm partial owner of, and we do syndications with our investors. And then we invest a lot into cash flowing real estate strategies. Like we buy large pools of mortgages. They have 20 to 30 years of payments still remaining. I love that for a cash flow building, and I love that for net worth building.
Interesting. So up until a few years ago, when you went primarily real estate heavy, you really were investing in businesses and cash flowing businesses. Why did you make the switch more so to real estate at that period?
So what I found was that the businesses ebbed and flowed. And that's great. That is the process of business growth, right? Growth for a business is very expensive. It can sometimes be organic, but that's a really painful road with a lot of risk. That means taking cash consistently off of the net and putting it back in and circling that. And sometimes it has a higher ROI. Sometimes it's more seasonal. Sometimes it's more market driven. There's so many variables on the business side. I woke up after managing multiple businesses, multiple companies, and I realized that while I was splitting my net at the end of the day, I was putting some back into the businesses, putting some into real estate projects and partnerships on the real estate side. I realized eventually the majority of my real solid income per month started coming from real estate. And I realized that the minority of my time was going to real estate. So the majority of my income and the minority of my time was from real estate. So if you calculate that on a per hour basis, for instance, real estate was such a better wealth building, cash flow building tool. And really, I was already doing it. I was working with these family offices. I was working with partners. So we sold the other companies. We got out of things that were more time intensive and less profitable. And we went all in on the real estate side, working with investors along the way, and found a lot more opportunity on that side. We just found we were better at it.
Yeah, makes sense. So on the real estate now, I mean, you allocate it amongst, development, call it, or cash flowing projects. I mean, how do you think globally? Like, is it multifamily? Is it commercial? Kind of walk us through how you think about that within the real estate sector now.
Sure. So I'm proud to say we have had successful projects in 6, maybe 7, definitely 6 asset classes in commercial real estate. Okay. We have done hundreds of mortgages. We've partnered on hundreds of mortgages. All that said, for that whole and owned and done multiple homes along the way as well, single family. All that said, we've narrowed it down to our 2 favorite. Today, after everything we've done, all the successful projects, I only invest in 2 asset classes in real estate consistently. The first are single family mortgages for cash flow. So if I'm looking to invest in cash flow, I want to build cash flow or streams of income on that. It's single family mortgages. We buy those in very large pools. We work directly with banks. On the other side, if I want to build appreciation, if I want some tax benefits, if I have a longer term outlook and want to buy the actual hard assets of real estate, I'm looking at industrial. I believe industrial has the longest track record ahead of positive success. You look at, even administration level of like the Trump administration, they're pushing manufacturing at home quite a bit. Tariffs are blocking off, the global manufacturing quite a bit and kind of creating some space for manufacturing back at home. Even the Biden administration wants more manufacturing on U.S. soil. So we see that not only on the manufacturing sector, but also in the distribution sector. Mexico is now our largest trade partner in the United States. So we buy Southern United States manufacturing and distribution warehouses, particularly in Texas and Southern California, because of the ports in both those, between single family mortgages for cash flow and between industrial real estate for appreciation and tax benefits. That's the two asset classes that I'm absolutely focused on for investing.
Wow, quite the evolution of where you came from. So I want to go back to working for free out of college. Just curious, what degree did you get when you went to college?
So this is interesting. I started off as business law, and it wasn't for me. I moved over to finance because that was, to me, what was going to be the backbone of anything I did moving forward. And then I started picking up classes in English. So I ended up, by the end, I was surprised on graduation week that I accidentally had a minor also. So I got a major in finance, I got a major in English writing, and then I accidentally got a minor in journalism. So that's my background as far as professional education.
Okay, and then right out of school, you're going and working at this family office. Walk us through going bartering for this job that you're not going to get paid for. I mean, also, did you have student loans that you had to deal with, or were you lucky enough to kind of come unscathed out of college with that in those early days?
So the backdrop of me graduating college, you think about a kid in their early 20s. I was blessed. I was blessed that I worked from a very young age. In my family, there's, I had kind of an Italian immigrant mentality and immigrant culture where you work from a very young age. So I started in construction, did banking a little bit, nothing super high level, more of a teller at best. And by the time I graduated college, I realized I was very focused on where I wanted to be because I tried a lot of jobs that were not a good fit for me. So what I wanted to do was be as close to very successful people as possible. I wanted to trade my time and learn before I earned because I knew that I could earn right away, but it wouldn't be a lot. Where if I delayed that gratification and instead I got close to someone with very low risk for them, then I could get closer to more knowledge that would have taken me decades to get close to. So I really targeted a couple small family offices, multi-generational. They were located a little further away, and I was willing to move. And I really just hit them up and tried to apply. And the first that ended up taking me on basically just said, "Hey, look, kid, I appreciate it. This is the Great Recession. This is the global financial crisis that we're in the middle of. So it is not an option to be taking on employees right now." And I said, no, you don't understand. I'll work for free. And I thought that was a golden ticket to get in, that who would not hire somebody for free. And he said, no, you don't understand. That's too expensive. Okay. I don't have the time to give you. I got a whole team. I got a whole staff. I don't need more free employees or anything like that because I don't have time to even train you for how to do any of this stuff. We are holding on for dear life. So the only thing I knew how to do by the time I left college with huge confidence was lean into the marketing side. So I worked for a couple startups in college. I learned kind of like, the early 2000s tech style of marketing where it was big data, managing, things like newsletters, managing things like large customer lists. So I started a newsletter in the real estate space. And I basically put together and segmented the newsletter and said, who on this real estate newsletter wants to invest? It was a small list because it was the great financial crisis. Nobody had money, right? And so I took that list of individuals that said, I want to invest. I went to the family office, the small family office that told me to pound sand. And I said, look, I know that I can't add as much value to you as your time's worth. I know that. But I also know you need revenue right now. And I know you need income. Here's a list of 500 individuals that want to buy real estate, even in the midst of this market. If you hand this to your in-house brokerage, your in-house broker, or your in-house agents, they can go sell these people and go buy apartments, go buy houses, whatever it is, and you can get some revenue. So not only are you have no risk because you don't have to pay me, but now you're making money on me. And he basically relented and said, look, we got this crappy desk in the back. I don't know, just show up Monday, bring that list, and we'll see what happens. And so that was the beginning. I was blessed with an amazing friendship with this guy. I was blessed with the amount of energy and effort and interest that he took in me. I think he knew I just wanted to work my tail off and do whatever I had to. And that was the beginning stages of that. I eventually kind of worked my way up to handle leasing for another group for free. Again, I said, only pay me on what I close, pay me very little. Eventually, I was handling acquisitions for multiple groups. Eventually, we acquired enough properties that they said, hey, look, we now have all these properties. We're really happy with what we have in the portfolio, but it's overwhelming our team. And Nick, you set the agenda for what these were supposed to perform at and how and what the game plan was for these properties. So instead of just giving it to other people, why don't you just do it? So I said, okay, and we built out an asset management side. So it was a slow progression. It was painful. It was a lot of hours, but I knew that being as close to winners as I could and adding as much value to them and asking for less than I was giving. So always giving them more value than I was asking for would get me further because it would show them the value along the way. So that's kind of the early stages of what I went through with those guys.
Spring is here. Baseball season is in full swing, and if you're not on Prize Picks, you're missing out on the best way to get in the action. I've been using Prize Picks, and let me tell you, it's the easiest, most exciting way to test your sports knowledge. You pick more or less on your favorite player's stats, whether it's strikeouts, RBIs, or first inning runs, for a shot to win up to $1,000 your cash. This week, I'm rolling with Shohei Ohtani for more than 1 home run and Aaron Judge for more than 1 RBI. The best part, even if one of my picks doesn't hit, Prize Picks Flex Play still gives me a chance to cash out. And here's the kicker. Sign up today and use code Millionaire to get $50 instantly after you play your first $5 lineup. That's right, $50 instantly. So what are you waiting for? Download the Prize Picks app now. Use code Millionaire and run your game. Prize Picks, run your game.
And how long approximately were you doing all that from the time you graduated?
I worked for the first group for 3 years or so, right? And then started working with the other group shortly thereafter. And, eventually they evolved into more of a partnership situation. So it was mostly performance because I never had a salary, right? I was never a salary guy with either group, but I was in office, had a desk, and I basically kept what I killed the whole time. So it eventually was like they would do deals without me. I would do deals without them, but we overlapped on quite a bit. I started handling asset management, started handling entirely asset management and managing that whole department. And over time that grew. But first group was a few years. The second group I'm still partnered with on a ton of deals today. I mean, 8+ deals today. So,
Wow.
These are long-term relationships that I'm blessed to have stepped into early on.
Yeah, for sure. So as you were doing all that, I mean, what were most of your friends and buddies and college classmates? I mean, this is a very atypical path to go post-graduation. What were they doing? What were your conversations with them like at that time?
Yeah, that's a good question. I was never afraid to do it alone. I'll just start there. I was never afraid of kind of doing my own thing. I loved my friends in college. They were some really interesting, very fun people. But there was a turning point in college where I realized they weren't people that were going to be lifelong friends. Just the path that I wanted to go, where I wanted to go, they weren't going to be there with me. And that was okay, because that's how life goes. They're going to make their decisions and I was going to make mine. So what ended up happening was there was a turning point in college where I hit a wall and, I just didn't agree with a lot of things they were doing. I mean, these people went off to do bad things, right? Like, have lots of substance abuse issues or really not have jobs and, spend many years fumbling around. And I kind of saw that early on. So I basically woke up one day and cut ties with everybody, just being like, I'm 2021. And I was like, I'm losing time here. We're in the global financial crisis. There are people that are making money. There are people that are successful. I was, in the music industry for a short period of time. That wasn't fulfilling at all. I wanted to be as far away from that lifestyle as I could. So starting at about 21, 22, I started working huge amounts of hours, trying to get close to all these groups and do all that. And I kind of knew that my 20s, I was going to trade the time to be closer to the path I wanted to be on. So I kept my group of friends very small. I kept the people close to me very small. And really, over the course of that, I was working 60, 80, 100-hour weeks most of the time along the way. And so as far as managing friends, I just realized they weren't going to be there anyway. That at the end, they weren't going to build me up. And I wanted to be around the people that would. So most of my friends in my 20s were or most of the people I surrounded myself with in my 20s were people that I was trying to learn from and add value to and be close to, because I respected where they were at in their lives. And I wanted to add as much value to them to learn as much as I possibly could. So a lot of networking. My free time was spent with people that I really respected, but I didn't have a lot of free time.
Yeah, makes sense. So at this point, you get on this early quick trajectory, get to 3 million at 30. I mean, where do you go from here? Do you have a target net worth? Is there a target, square footage in industrial space or single family mortgages that you want to acquire in your lifetime? Do you have goals that are that far out there on that stuff, or how do you think about that?
So I'm in my late 30s now. I'm like an old man now compared to my 20s when I was just we were talking before. I have a full family today. I got 3 kids under 6. It's nothing like you, Jace. You got 5 kids under 6. Audience, if you don't understand what the strength and the power of this man having 5 kids under 6, oh my gosh, I am impressed.
It's my wife. It's my wife, not me.
Me too. My lady's a superhero. Okay. I'm just a supporting cast. But that's what keeps me focused very clearly. So while I can give you the exact numbers, I do have income numbers in mind. The simplest number is I want to hit $1 billion in assets under management, right? That's I think we can get there in 5 to 7 years. Candidly, we're at about 200 million today. I like our trajectory on a number of things. I think we're, in that period of time. Most importantly is I just try to stay really focused. So what I'm obsessed on is 3 things. It's health, wealth, and legacy. So on the health side, I found that when I was working 80, 100-hour weeks, that my health dropped off dramatically, right? Of course, how could it not? Because I was eating like crap. I was drinking a ton of caffeine, wasn't sleeping well, missing the gym. So I'm looking for a more balanced approach today because I found I make better decisions. I manage our team better. I give them better strategy and insight. I'm a better person, can give more when I'm healthy. And then it also includes time with the family and time with my girl and my kids and all that, just the health of tight relationships. On the wealth side, my goal is, it's a 1 billion under management today. I have my own personal net worth, goals and dreams and aspirations on that side. But the easiest is 1 billion, assets under management at Saint. And then on the legacy side, it's I want to implement the things I learned from my mentors early on. I want to give my children the opportunity for generational wealth. It's kind of funny in the US, we poo-poo second generation wealth, but everybody talks multi-generational wealth, right? So I want to give my kids opportunities for that. I want to help them be able to step into opportunities and keep growing the wealth and do great things and support causes that are very important and support education and support, the things that will make our country great, make my, kids' future generations great. So between those 3 things, that's what I'm focused on every single day, is achieving goals in those 3 areas.
Let's talk about the legacy for a little bit, because you bring up that, in the United States, sometimes it's a little bit poo-poo. And honestly, like, we have such a massive international audience. So this may not apply as much to everybody around the globe that listens to this podcast. But in terms of the way you think about passing on those lessons, passing on some of the wealth, passing on, some of the things that maybe you grinded through that maybe you're like, well, maybe I can, sidestep and for my kid or whoever, and shave off 5 or 10 years. I mean, how do you think about that? What tactical things do you do or are planning to do to go about doing that?
I would the number one gift that I can give my kids is the gift of anything I've learned. It's not the money, right? It's not going to be the money, because if they don't go through the tough stuff, then they won't have the experience or the strategy or the mentality that it takes for all those things. So they will work from a very early age. There are constant studies about 2 of the most impactful things for future success are early chores for children. It builds self-confidence. It builds the child's ability to problem solve. It builds hard work. And then the second is working at an early age. I'm blessed that my family had that expectation of me. That was a gift. I didn't feel it working heavy construction in the middle of the California summers, right? That didn't feel like a big blessing. But now looking back, it absolutely is. So That's number one, is the mentality that there are expectations. I have expectations that I place on myself for my dad, my grandfather, people that, my family's immigrants on both sides, at our core. They came here, one brother from 10 brothers or 10 siblings came here out of the whole bunch from Italy. I take that personally, right? When I look at my grandfathers, et cetera, I owe them a debt to work hard, and I want my kids to have the same expectation. The second is, when it comes to the money, is that they have to have enough, familiarity and success and sophistication to understand what that looks like, because otherwise they'll blow it. We know this, right? It's the old, who was it? Henry Ford, I think, a big mind in American history. It was one of the big minds, maybe Benjamin Franklin. It's one of those two that said, like gutter to gutter in 3 generations. It's like one generation makes it, one generation, spends it, the third generation blows it and is back to square one. So it's learning from generations that didn't blow it, right? Learning sophistication of how to manage wealth and use that for the right things, right? To give back, to have opportunities to make the country a better place, to have the opportunities to make the family more educated and more opportunity. So that's how I look at legacy, is giving back, on a philanthropic note. For me, it's things like cancer research is extremely big. And then entrepreneurial and business and investment education are huge. That's why I take the time to do stuff like this. It's very passionate for me. And then on the personal side, it's giving my kids as much insight, as much knowledge, as much support to push them towards things like hard work. I think that's part of the process, to push them towards things that make them better and stronger and smarter and more experienced, and understanding that protecting them is not the path that I'm going to give them. I want them to have a little bit of the hustle, a little bit of the grind, a lot of that. So that's kind of how I look at the legacy side.
Yeah, that's awesome. Thanks for sharing that. So as you grow and you get to these next levels of wealth and you focus on these 3 areas, do you see any deviation in kind of your strategy or approach that may take place? Or are you still pretty focused that these 3 ways, these 3 things are going to get you there? And the last 15, 20 years have really provided the experience now that you know how to dial it in and make it happen.
So I do see a shift eventually. One of the amazing things, so we work with only accredited investors at Saint. So most of our investors are multi-millionaires. That's why I love the topic of your podcast, is because it's people, it's topics, it's discussions that we have on a regular basis every single day with investors. So over time, what's amazing is we build this really great network. We build this really great group of investors where we have webinars, they join, we have good discussions, economic, strategic, all these different things. Over time, I see us leaning more into philanthropy and adding that as a very real piece of what our focus is. We get asked pretty regularly about some things like, investors are asking advice on where they can place money that's more than just an investment. We're talking with a couple foundations, especially around things like entrepreneurial and business, pro bono education for communities. So eventually we'll lean much more heavily into philanthropy along with our investing and along with our investment funds. But, at this stage, I'm still heavily on the warpath. I still want to grind. I still want to make money for our investors and do all that. So someday the philanthropy piece will slowly begin to grow as a chunk of our focus. And that legacy piece, just, probably until my last days, the legacy piece will slowly grow as I focus more on that and less on like the wealth side of the equation. So that's how I see that progression.
That's awesome. Well, let's wrap up with some rapid fire questions. What's the most expensive pair of pants or shoes that you've ever purchased?
Oh my gosh, that's a great question. I bought a nice suit that I really like. And it's a classic blue one. I wish I could tell you it was really crazy, but I probably spent no more than $1,500 on the whole thing.
Okay.
So I'm not a big spender, but to me, that was like, I love this suit. I can't not have it, and I'll use it for many years.
Nice. What about the most expensive meal out that you've paid for?
Okay, that's a real discussion. We've done, I'm blessed to have a really big family. I have, 50 something cousins. We usually fight for the bill on stuff, for that. I mean, we've definitely had dinners that are 5,000 plus.
But that's for 50 people?
No, not all 50. That's a small one. That's a small group blowing
Okay.
it on
Okay. That's not
things.
terrible. That's not
That's where we
terrible.
spend. That's where you spend a lot of time. That's where you spend a lot of money. That's a big hole in the bucket financially, if you want to think of it that way.
Okay, but you got a lot of good memories, I can tell.
Oh yeah.
That's great. What about the most expensive car or toy?
Oh man, I that's a really boring answer. I'm telling you. Maybe 120 grand, 110 grand max. Like that's really my favorite car was my 2013 Prius, my 2012 Prius. It drove in the carpool lane by its, so I that was a very sentimental car. Now I drive a very conservative car. I don't blow money on a lot of stuff, in that category.
Okay.
Watch,
What'd you say?
watches. If I was gonna blow money, it'd be on watches.
Okay. Do you have a little watch? This has come up actually quite a bit lately on
That's
our
it.
podcast. Yeah, there's a few that are either, I think we had one guy that anytime he kind of has a major event, he goes and buys a watch to commemorate it, whether it's getting a new big client or buying a new house or I think he had his first kid not too long ago. So he's been buying watches, which is kind of funny because I'm like, I do a little bit of that, except for with rings, a little cheaper. But I hear you on that, But
Yeah.
are you a watch guy? Are you buying some Rolexes or some nice watches?
I stick to the classics. I really enjoy Rolex. I like, mini. I'm very partial to Rolex, but I have my eye on a Patek, a specific one that is like a gold
Okay.
watch down the line. So
That seems to be a common comment. I like it.
Yeah.
What's it gonna take to buy one of those?
I'll tell you the event. When we cross $1 billion under management, I'll buy my dream watch. I'll put it that way.
All right. There we go. I love it. What's a key lesson that you learned from childhood?
The number one lesson I've gotten, I could say hard work, which is just such a key concept. It's so simple that just working your tail off pays the highest dividends. And don't shortcut the hard work and get there. But what I'll say is the number one lesson that I learned transitioning to an adult is don't be patient. Patience is a problem. I will absolutely say that. It's contrarian, but patience is not a virtue. Patience is a virtue when it's later, when you've already had performance, when you've already had consistency, when you've already found a track record, when you've already been on the right path. Then patience is a virtue, but don't be patient and get there as fast as you can in the right ways and find the best way to do it and be relentless until you hit that. And then you apply patience after the fact when you're on all the right path at the right trajectory. So I would say patience is a problem. Don't be patient.
Okay. What's your favorite thing to spend money on?
I like traveling. I really do. I don't get to do it enough, but traveling is a very special time, whether it's just me and my lady. We always reconnect best when we get some alone time that's fully unplugged. Time with the kids. Jace, you know this, right? Where there's just less distractions. It's so unique. Going for a walk or checking out the tide pools and finding little animals and stuff, or with, my larger family and seeing them in different elements in different places. But for me, the experiences are worth 2x, 5x, 20x what, ownership of, material stuff is. So if I'm going to put money towards anything and it's going to be really filling the cup, it's absolutely going to be on travel and experiences with the family.
Is there one that you've had already that's probably been one of the most memorable ones so far?
Oh man. Well, on a personal note, I did Japan just with one friend, and we broke off for a period of time and had our own kind of solo experience, solo adventures at different points. And that was very special. Being dropped into another country, not knowing the language, knowing how to navigate or not knowing how to navigate, just kind of figuring it out. As a very young man, that was the most meaningful and the most skill and confidence building out of any trip, I'd say. But early trips with kids are also very memorable. Their first time seeing, something very special, or their first time, achieving things and doing that fills the cup also very much.
Nice. Anything on the bucket list out there still that you want to go
to? Oh man. I secretly, and I'm putting this off for a period of time until my kids are older. I want to go skydiving and get certified, in the Swiss Alps or something like that. Something in this, a scenic, beautiful, extreme sports area that can do that. So that's a secret back end bucket list, is skydiving somewhere like the Swiss Alps or somewhere where it's an extreme sports hub. I think Switzerland has a couple that I was looking at, and that's way off in the future. But that's what I want to do is do a trip where I can really lean into that and go have fun and do some wild stuff.
That's cool. What financial habits changed the most since you became a millionaire?
I would say understanding the difference between appreciation and cash flow. Early on, I put a lot of money in stocks, and I thought that it was just that, forever chip away dollar cost average approach that I was looking for. What I actually found is that investing with intention and being extremely clear on the outcome you're looking for yielded the best results because you're checking the actual box you need. So now I invest for really kind of three different categories. I invest for cash flow, I invest for tax benefits, and I invest for appreciation. All of those are very different. And so where I place my money is with very high intention of what I'm trying to balance in my portfolio.
When you're making the investment, do you typically lean in on cash flow first? Or is it just kind of the situation? Do I need tax benefits at this point? And then on second part of that, I mean, is there specific kind of IRR or rate of return or ROI that you pencil or MOIC that you've got to hit, or it's just not even worth messing with?
Absolutely. All those. Yes. So the first is that if I was going to do things over, I would have leaned into cash flow earlier. Why? Is because once you have a decent income, right? Let's say above 250 grand a year. Once you have decent income and you actually have some disposable cash that you got to figure out, if you start placing your money in things that are appreciation type assets, what happens is, you can end up in a cash crunch where you actually need the money, but you're in a 5-year fund, or you're in stocks and you got to sell those and take a tax. And I just didn't like that structure. As time went on, it became less beneficial and more restricted. So where I'm at today, if I went back and could give myself advice, I would have invested cash flow first. I would have been looking for things that were, 10, 12%. That's probably my benchmark of what I see for cash flow that's starts to put it in a real serious, respectable category. I only see a few places for that in the marketplace. But that's where I'd be looking on the cash flow side. On the appreciation side, we have a ridiculous average. We have over 35% that we've averaged on our exits. But the thing is, appreciation, getting really good returns on appreciation, a lot of that's market timing, right? Like there's nothing that changes the market dynamics or changes the market timing. It's bigger than all of us. So, betting on that every time gets complex. I'm looking probably, if I'm an investor right now and going into, an appreciation strategy, I'm looking at something that covers a good chunk of taxes, maybe like 50 to 60% of my invested amount on a tax write-off. And I'd be looking for something like high teens, 20% on expected, projected IRR. So that's where I'd be thinking right now in the marketplace. Again, I'm extremely partial to real estate because I just see it as it checks the most boxes and has the best thesis in today's environment with the Fed, inflation, market dynamics, multiple, both sides of the aisle pushing, especially, industrial real estate. So that's where I'm thinking today. And that's definitely, if I went back, I'd start with cash flow and go appreciation second.
Cool. Appreciate you sharing that. What's the dumbest thing you ever wasted money on?
Education courses. I'll put it that way. I am a huge proponent of reinvesting in yourself. I'm a huge proponent of self-education. But there's courses that I look back on and I'm like, man, I spun a lot of wheels there. I learned a lot of what not to do, right? But they're also not cheap now, right? There's courses that are 50 grand out there. And, I regularly invest in education. I always will. And there's some that I wish I did. I'll put it that way.
Okay. What's something you spent way too much money on, but you don't regret?
Also education. So, picking the right courses has made me more money than anything else, probably, as far as flat ROI. So I guess the real lesson here is knowing what to pick and what not to pick, and knowing, but I mean, if you want to talk ROI, Jace, there are books written by billionaires that live amazing, happy lives for what, like $15 on Audible, right? So think about that ROI. But education has been on both sides. And then my house is It didn't make sense in many different ways. It wasn't a great deal by any measure, but I have more joy with my family. I have more joy looking at my house and experiencing and making memories in my house than anything else. So I'd say education, kind of tongue in cheek a little bit, but my house would be the confident answer.
Nice. How'd you make your first buck?
Well, construction was my first income, my first dollar. My first entrepreneurial dollar was in the ATM business. So I took everything I saved up. I bought an ATM unit. I learned how to operate them by working at the bank when I was a teller, and I just freaking roughed it. I found a competitive advantage by contacting landlords, retail landlords, and basically trying to cut them in on the action, giving them a piece of the profits. And we were able to scale that up, and it was awesome. So I still have that first dollar. Oh my gosh, there it is, right there.
That's awesome. That's
Right
awesome.
there. Still that first dollar. And that was from the ATM business. I realized I hated it, because it took so much time. But for a young man, early 20s, in the middle of a global financial crisis, to be making six figures from a self-started business, I was proud of that. I was really happy.
How old were you when you started construction?
About 13 plus or minus.
And
About 13.
how much do you make doing that? Do you remember?
I do remember. It was $10 an hour. And I worked, 10 to 11 hour days. It was a summer job, but I did masonry. So I picked up 110-pound blocks. I built keystone walls for an amazing man who was like a mentor early on. He was a New Zealand immigrant, a Kiwi immigrant. And eventually he learned that I spoke really bad Spanish. So I hired our workers every day, and I think I got a raise to like $10.50, right? But, most of the day laborers made more than me at that period of time. And I worked with great people. I worked myself off. I got a tan and I was very fit. So I was happy. I couldn't have asked for more.
There you go. That's awesome. What's the craziest thing you've ever done to earn money?
Oh, man, that's a good question. I was a DJ in college. That was crazy.
All right.
So I was a DJ in college. I went to college in LA and I DJ'd for, I don't know, a handful of years. And it paid my bills and it was really fun. And I realized I was done with nightlife after that. And so it taught me actually a lot because I got to see, people think like the glitz and the glam of nightlife and the whole industry and clubs and all that. And I saw a lot very quickly. And I realized how much it wasn't for me on a regular basis. So that job was a blessing. But if I look back on some of those experiences and what I saw, I'm very happy that I chose not to go down that path further.
That's cool. What's a closely held belief that you once had that you recently changed your mind on?
That's good. That's really good. I'd say the house thing was a big change because for me, I just never wanted to. I didn't want to own a home in today's environment. I figured I would invest that money. I looked in if you just look at the numbers. I live in Southern California. I live in a very expensive area. Most of the country has slowly shifted where renting was more expensive than buying, your monthly payment, et cetera. If you could figure out the down payment, many parts of the country that made more sense. It never did in Southern California. In my lifetime. So I just was like, why would I do that? If I buy a home, it's going to be an investment. It's going to be a tax strategy. It's going to be a cash flow, blah, blah, blah. But I'll never live in a home. Why would I do that? If it's I could just invest the down payment and get a higher return. And I just couldn't get over that for many years. And now that I have a bunch of kids and I have a family, and in my neck of the woods, you can rent and you'll save money. You will save money overall, but you'll never live in a home that is as nice as you want it to be. You'll never live in a situation where you really feel bunked in. You're going to be negotiating on your lease. You're going to be fighting through that. And so buying a home was an insane blessing on my side. I'm proud that, I got lucky and bought it at a good time in the market. I would have never bought a home. It was a zero chance. I never, ever thought that that'd be the right move. And sure enough, the timing lined up, the mentality changed, and I'm really happy I moved in and bought a home and entered the market on the homeownership side.
Awesome. Nick, you've shared so much great advice. Any last pieces for somebody who's just starting out on their journey?
I would say the number one thing that I would say at this stage, which is an interesting time of the country's history, an interesting time with more opportunity than I truly believe we've ever had in decades and decades. But I believe the wheels of economics, the wheels of the economy are turning more than ever and impact small businesses more than ever. What I'd say is learn as much as you can about the economy, learn as much as you can about business, become sophisticated and understanding your way around that, because all that information is now out there. And if you can get your arms around that and the amazing business education that's out there, if you can get your arms around the amazing economic forces at play and what we're seeing and what we're expecting as a country, and you get on the right side of those things, there's so much opportunity out there. So that's what I'd say is kind of the state of the market that we're looking at today that I think would be valuable.
Where's Nick hanging out nowadays?
Man, I'm in the gym every morning. I geek out on powerlifting right now is one of my dorky things. So I'm in the gym a lot in the mornings. I spend a lot of time in the office, and then try to get my family out on the weekends and do something fun. We're doing a lot of doing a decent amount of traveling, seeing new things, and kind of staying a little more local these days. But nice dinners with friends and family, or I'm with my kids trying to show them cool stuff.
All right, Nick, where can people find you?
The best place that we can add a ton of value for 100% free is saintinvestment.com/resources. We do free webinars all the time on investment strategies, on the state of the markets, the best investment opportunities available today, economics, and how to put it to use on your side for your benefit. We give all that away for free at saintinvestment.com/resources.
Awesome. That's Nick. Net worth $3+ million at 30 years old. Thanks for coming on the show today.
Hey, Jace, had a ton of fun, man. Look forward to catching up soon.
Thanks for listening to the Millionaires Unveiled podcast with Jace Mattinson. For more stories, investment opportunities, and information, check out our website, millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.